And we are back with yet another episode of Simplified with me, Tanvi Shukla. One of the most spoken about, discussed, awaited IPOs. The biggest IPO in the Indian stock market history is now going to be hitting our stock markets, that of LIC. This is an announcement that the government had made in the last year's budget. But because of various reasons, it could actually not happen last year. And finally, now in the month of May, LIC will turn into a publicly held company as its stock gets listed. Now, when is it going to open? The LIC IPO will open on May 4th and will remain open till May 9th for anybody who wants to invest and get a stock to actually place their bid. The price band has been fixed at 902 rupees to 949 rupees. This is largely the price band that they are looking at. There will be a discount not just for the employees but also the policy holders. So for those 29 crore policy holders of LIC, the mega insurance company, there is something to watch out for. This is your time to get something more out of your insurance, beyond your insurance. Of course, there will be a specific quota that is being reserved. So a 10% of the shares are being reserved for the policy holders, and that's where people can actually apply under that quota. There are lots of rules and regulations even for that, and we're going to talk about this over the next few minutes as we discuss the LIC IPO. Now, let me just first tell you why. Why is everybody so excited? I don't need to actually explain to you what LIC means to crores of households in this country. And all of us, especially those of my age, a little younger and older, would remember agents roaming around. Every family had some or the other relative who was an LIC agent or was trying to sell you an LIC insurance policy. That's how well known, and that's the kind of household name that Life Insurance Corporation is for us. But let's put it in perspective, and here are some interesting statistics. LIC was actually created by merging about 245 different private entities back in 1956. When several of the companies suddenly went bust, the government had to do something about it. That's when they decided to make this state-owned company by merging so many of those. And then for decades together, it was only the LIC effectively kind of had a monopoly over the insurance market, almost up to 2000, when private players actually began to come in. So it is the largest state-owned insurance provider with 39.6 lakh crore or trillion rupees worth of asset under management. That's how big it is. It offers insurance, as you all know, pension plans, unit plans, several other special plans and group schemes which are available. LIC's distribution is one of its strongest pursuits. It's almost present in about over 90% of districts in our country, and that's one of its strongest pursuits. It's the biggest institutional investor in the Indian stock market. Almost every year it puts 50,000 crore rupees into the stock market. That's how big it is, and that's how much money it actually plays around with. 64.5% of the total premium collected in the insurance industry is by LIC. At one point it was much more, but now with more private players coming in, the market share has declined. Still, it is this big. If LIC's 29 crore policy holders had to actually come together and make a country, it would be the fourth most populous country in the world. Imagine that. Wow. So let's discuss more about the LIC IPO. And here are the questions I'm going to be asking our expert. Why is LIC to begin with? Why is this giant state-owned company now going public? What is the rationale behind that? Will investing in LIC be safer because it's a government-backed company? A lot of you may have invested in the mega IPO rush that took place last year. Some of you may have burnt your fingers basis where some of those stocks are trading. So will this be a safer bet? Will all policy holders get a discount in the stock price? What are the terms and conditions? We'll look into that. Post the IPO rush of 2021, should you invest in LIC? That is the biggest question, but we'll keep it for later once we've built the entire setup. And of course, there's quite a bit of controversy around this IPO as well. Apart from the delay and the fact that the IPO size itself has been cut, the value has been reduced, What are those controversies, and is there a legitimate concern or not? Without wasting any more time, let's say good evening to Pranav Haldea, MD of Prime Database, joining me this evening. Pranav is a expert and extremely articulate when it comes to stock markets and IPO specifically. Pranav, let's start with the first one. Why is LIC going public?
Well, firstly, I would like to start by congratulating the government that we are finally seeing that this IPO is seeing the light of day. It's been in the works for a long time, and despite extremely challenging conditions that you've had in the last few months, it's extremely heartening to see the government going ahead with this IPO. Now, why is it getting done right now? To answer that question, the government has also, in fact, come up with a very heartening statement yesterday that it is not about divestment. It is not about, meeting the fiscal deficit figure. This is about much more. And it's really about, bringing this large enterprise to the public market and, bring in a lot of transparency by being a listed entity, which LIC would, now be subjected to.
Okay, so you're saying it's actually not just about the fact that the government needs money and the government needs to, bring in more money to ensure that the amount it's spending in pandemic and post-pandemic time, it's able to raise those funds beyond taxes, but it's actually a lot more to that. And that's an interesting point, because a lot of the criticism is actually coming from the point of view of government for its own desperate purposes, is actually pushing through an IPO, which is probably not the right time to do so. But let's move on to the fact that whether or not the fact that it is a government backed and owned insurance company, does it make it a safer bet for anybody who's looking to invest?
Well, first of all, I would also just want to add that, the policy of this government has also been, that all profit-making CPSEs should get listed. In fact, the last year's budget also that you were referring to, the finance minister did, clarify that a lot of public sector banks and insurance companies also get listed. So, this falls largely in line with the government policy that, a lot of its enterprises do get listed and, are able to enjoy all the benefits by virtue of being a listed entity as well. To the other point, if there are concerns that the government is desperate to kind of raise this money right now, I don't think that is the real issue here. As we all know that, the issue size at one point in time was supposed to be upwards of 1 lakh crore. And then it got scaled down to about 50-60,000 crores. And now you're actually seeing a very limited dilution taking place of just 21,000 crores. And only 3.5% is getting diluted. So, all this points to the fact that this is not really, a revenue garnering exercise of the government, but, it's a stated policy of getting this enterprise listed.
In fact, the next question that I wanted to address was, will all policyholders get a discount in stock price? And in fact, we went through the details to, really see how it's going to work. So if you're a policyholder whose all details are updated, if your PAN information is updated, if you have a demat account as of February end 2022, then you are eligible to apply under that quota, the 10% quota, and get a discount, 60 rupees discount for policyholders, 40 rupees discount for the staff members also. That's what LIC has decided. Every other policy except group policies, if you're a policyholder of any other kind, then you are eligible. But they have specified that this is only for Indians living in India. If you are a non-resident Indian who may be a policyholder, you are not eligible for this specific discount. So much has been spoken about as far as the discount for the policyholders is concerned, and that's where the details of the eligibility criteria lie. But let me go back to Pranav on the rationale behind it and if it makes it a good bet. So if it is not about raising money for the government, Then why is it that we're looking at this IPO right now, according to you, Pranav? Because there is a lot of concerns that are also being raised that there is so much of global market volatility, so much of uncertainty. There is a war going on between Ukraine and Russia that's impacting all kinds of commodity prices, all kinds of policies. Is this then the good time to actually hit the market with the biggest IPO that we've ever seen? I mean, everybody saw what happened with Paytm, which was the largest so far. So why is it that the government has decided to go at this point if it doesn't need the money?
Well, first of all, I would just say that even if we say that the valuation is not being maximized at this point in time, and there's all kind of volatility, etc., etc. Ultimately, we should realize and accept the fact that this is all public money, which is going back to the public. All public sector enterprises have been built on the back of taxpayers' money. And in case you do offer discount, and we've already seen the discounts being announced to retail shareholders and employees and to policy holders, it's really public money going back to the public. And more importantly, the government will continue to hold 96.5% of LIC even after this IPO. So, if we assume that, there is good listing and post-listing performance, actually the government will be the maximum beneficiary of that. And, this reminds me of the Maruti IPO as well, which came in 2003, which also came in a very bearish market. But the government earned huge amounts of money because of the value creation which happened after the Maruti IPO got listed.
Okay, interesting that you make that point as well. But so one part, of course, will be that it makes sense for everybody right now. You earn some money at least. The lower valuation that we are looking at, the fact that there is a debate going on whether this price is cheap and discounted or if it is fairly priced. Do you believe that somewhere the government is also and the experts are playing it safe with this price? Because we've seen what's happened with a lot of IPOs that got listed last year, and almost 60% of those IPOs are now below their listing price, 40% are below the issue price itself. So even if they have to take LIC public, they rather look at a safe zone such that investors don't lose money in a government owned entity.
Absolutely. I think the government has been very sensible in terms of reducing the valuation. I know that from where we started, we were looking at a valuation of 16 lakh crores, which was then reduced to 11 lakh crores, and now I think it's about 6.5 lakh crores. So, given the overall macro market, the current sentiment, I think it's a very wise reduce the valuation. Like I said, that only 3.5% is being diluted right now. And the focus of the government from a revenue point of view also can be actually on the 96.5%, which remains with it. And all of this, of course, makes it extremely attractive, not just to institutional investors, but also to retail investors. With every IPO, there are two aspects to it. One is the quality of the company, and the other is the valuation at which it's coming. As far as quality of this company is concerned, of course, firstly, it's a public sector enterprise. So there are no concerns about, fraudulent promoter or any of, corporate governance concerns which come typically with the private sector. This is, India's topmost brand, like you were mentioning. I would also just like to add that actually it is every Indian's first financial investment. If you go to any town, village, city, and most of us in our lives, our first financial investment, has been an LIC policy. So as far as the company and the brand is concerned, there are really no issues about it. And that leaves us with the valuation aspect. And like I said, that valuation has already been scaled down drastically in light of the current circumstances. So I think it's extremely attractive, and investors should really look at investing into this.
I want to add to that and further discuss a little bit more about LIC. Like you said, It's a household name. Everybody knows this. There's a great amount of brand value, great amount of trust which is associated with LIC. But let's look at some of the pros and cons as I would want to list them. The fact that it's government owned also means that it's a safer bet. Any other private insurer may go bust, although that doesn't really happen that often, and we have lots of checks and balances in place. But at least we know that this one definitely won't, because the government is right there backing this entity and will burden that will take on that burden. There is immense amount of trust and brand value already associated with this, which is always good for business. The fact that it has a very, very strong distribution network for decades together, it was LIC, and the way they structured their entire distribution network with almost 15 lakh agents that are currently there selling LIC policies, they ensured that they could go door to door, town to town, village to village, and take this LIC plan to every single Indian, which is why it's such a strong distribution network. It's not one of those new age companies which is only available online for you to yourself go ahead and do it. Their distribution network ensures that even those who are not tech savvy can actually get an insurance plan. So those are the pros, but there are also some cons. For example, while it was the one behemoth which had pretty much a monopoly, with the onset of private players in the last 2 decades, LIC has constantly lost its market share. That doesn't mean that it's not growing its business. It's still growing its business significantly, but not as fast as some of those smaller private players are, and that competition is now here to stay, and that's always going to be one big challenge for LIC now. The other one is because of the large distribution costs and human costs involved, and several others. Their premiums are reportedly, experts say, higher than several of the private players, and that continues to be one interesting fact. And of course, LIC as an entity is often seen as the go-to rescuer for the government. If the government needs some fundraising exercise to be bailed out, it's always LIC to the rescue. LIC has so much money. It's one of the biggest shareholders when it comes to companies like ITC and L&T, and if ever there is a fundraising exercise which is not seeing a good response, you'll see LIC swoop in and invest as much money as is required to see it through. If there is any financial institution which is in trouble, the most recent example being IDBI, LIC is brought in to save there. That many think is also a tricky point because of the way it has been used and its funds have been deployed. What is your view on this on an overall basis? How should an investor who's judging LIC's business look at LIC's future?
Well, I think you've already mentioned a few points, but as an investor, what I would really look out for is, one, obviously, as we know that LIC, of course, it was a monopoly earlier. So from a monopolistic position, you can only go down. But of course, their market share has been coming down, and private sector has been gaining. So that's something which needs to be addressed. And second of all, there has to be a roadmap for the government holding to, be reduced over a period of time, because, we've seen that obviously, public sector typically lags private sector, and, with a 96.5% stake post IPO, and even after, multiple rounds of dilution, the government would still be in control. So, that's something which would need to be looked at, in the years to follow.
Okay, that is something that we must look out for and must keep in mind, must factor in. Let me again get back to a point that we briefly touched upon, Pranav, which is about lessons learned from last year, the IPO rush of 2021. Now, in individual numbers, we saw about 51 IPOs that hit the stock markets. The year before that, we saw more in number. But if you actually see total amount of money that was raised in the stock markets, or almost 1.2 lakh crore rupees, it was perhaps the biggest years that we've seen. 60% of those IPOs, though, are now trading below the price that they got listed. 40% of them are trading below the issue price. So some of them after they got listed went up. People got extremely happy. Maybe many actually bought more stock, and then those prices fell down. There were lots of high profile stock listings that took place. Paytm being the biggest one, but then there was also Zomato, there was Nykaa, some of the other big listings. Policy Bazaar itself actually hit the stock markets. What would be the lessons learned from there? Because we've again seen a trend where money which is coming to the stock markets in IPOs is going back to safer options, say like mutual funds. Pranav?
Well, so, my view on that is that I think it's extremely unfair that we expect all IPOs to, continue to deliver positive returns until perpetuity. If it were the case, it would become the best fixed income instrument out there in the market. So we have to accept the fact that IPOs are, if I can call it an asset class, it's an extremely risky asset class. Generally, the sentiment is that retail investors should go through the mutual fund route. If not, then look at already listed companies. And if you have even a higher risk appetite, then you can look at, IPOs. These are unlisted companies. There is not too much information which is available in the public domain about these companies. There is obviously, so there is information asymmetry. And also, the price discovery is also fairly limited because there are the supply is extremely limited. So so we have to accept that IPOs are a risky bet, and it's not that you can expect all IPOs to give positive returns until perpetuity. I think once a company gets listed after its IPO, it will behave like any other listed company, which goes up or down on the basis of its own performance. You have quarterly numbers which all listed companies need to disclose on the basis of how the sector is doing, on the basis of the overall economy and other macro concerns. For example, so if you are looking at the price right now, then you've seen a broad correction across the entire market. So it is unfair to single out IPOs and say that 40% of those are trading below the issue price, when a majority of already listed companies would also be trading way below their trading prices from last year.
Okay, fair enough. In fact, if you see the IPO index itself, it's done significantly well in 2021. So I get the point you're making. I think there is a larger general mindset amongst retail investors that if it's a good company, it's just coming into the market, you buy it and keep it and forget about it. But that mindset needs to perhaps change. Like you said, it's a very risky asset class. So we must first do our research extremely well before we get into it, and then watch out for what price we've already got out of it and for how long we should stay in that stock. So then the most obvious question, and I will again ask you this after all that we've discussed, should people look at investing in LIC?
Well, so I would like to mention that I do not offer any specific IPO commentary in terms of what investors should do or should not do, or in terms of valuation. But all I can say is, like I mentioned earlier, that for any IPO, there are two things which investors, especially retail investors, need to look at. One is the quality of the company, and there you have to look at the promoter, its governance, financials, comparison with peers which are already listed. And second of all, is the valuation aspect as well. And from what, from both these points, LIC looks to be an interesting value proposition, especially in light of the fact that the government has been extremely conservative in terms of its valuation, also in comparison with already listed insurance peers.
Okay, so but do you believe that, a lot of concerns that were being raised because the IPO did get delayed, it was supposed to be last year, it's only now coming in now, there is another deadline, otherwise they were mid-May, otherwise they would have to again file some updated earnings. So that concern was there. There is also the concern that what's happening in general globally in stock markets, and there is so much of uncertainty around if this is a good time. There has been much debate about whether this decision is more for the investor at the cost of the interest of the policy holder or not. So quite a few things, but you think that at this time, because of the price that the government has put to it, it still makes sense to go ahead and apply for it. Would that be correct?
These two things are absolutely separate and should not be mixed. I mean, the fact that the LIC IPO got delayed for a whole variety of reasons is, not related to whether it's a good investment proposition now or not. Like I said earlier, that the company and the valuation looks attractive. It got postponed for a whole variety of reasons, including a lot of global factors. In fact, if you just have to look at this year, you've in 4 months you've just seen about 8 IPOs, which obviously points to a slowdown in comparison to the last year, wherein you saw a frenzy of IPOs. So it is not just that we can blame the government or say that just this IPO got delayed. You've seen a slowdown in the primary market across the board, and for a variety of reasons. That still doesn't mean that this is a bad investment proposition. And I think especially because of the valuation reduction which the government has done, I think this looks quite attractive.
Okay, great. Thank you so much, Pranav. Thank you for taking all of our questions at the cost of maybe repeating some of your answers. But what I did here was try and pick up as many queries as I could from what people have been discussing and people have been asking, and get those addressed by you. So thanks so much for actually taking all of my questions patiently. So there you heard it from an expert who knows a lot about the IPO market itself and analyzes a lot of data which is available, and that's what he had to say, that one, don't really think that because some of the stocks that got listed last year did not end up getting a lot of good response, or are now at least those stocks are not doing well. That shouldn't be a reason for you to look at it. It's a strong company. It has some pros and some cons, but at the price that the government is giving it, it does appear to be a safe and sound option to look at. We of course going to keep a very close track of how it goes from here on. May 4th, the IPO will open. This is India's biggest state-owned insurance company. It's also going to be India's biggest IPO after Paytm, which was last year. And this one, even though it was supposed to be an IPO which would have perhaps been 3 times the size of what it's going to be, but even then it's the biggest we are seeing. So things are going to get extremely interesting and exciting, and we'll get you all of those updates, and we will keep simplifying those updates for you as well. Thank you so much for joining us today.